It's another segment of Trading Bits and Bytes on the Rural Radio Network. I'm Clay Patton. Thank you to Susan Littlefield for letting me fill in on another great and fun edition. Welcome to my home studio as well, as you can see behind me. Now, talking to trade with us here this day on the Trading Bits and Bytes is Jeff Peterson of Heartland Farm Partners. And Jeff, as always, appreciate the time to come and talk the markets with us. It's been an interesting week of trade, and really I start here on the export side of things. We came in with Monday marking 10 straight sessions of China making flash sales, but then Tuesday and Wednesday we went on a hiatus and we started to dip lower. Thursday, China's back in the markets with a record purchase of almost 2 million metric tons, something that we hadn't seen since the days of the USSR. So overall, coming here towards the end of the week, I know prices are towards the low, but what do you see as the broad market picture here?
Well, I think the biggest thing we have to think about here is kind of what's the environment we're in. So let's just kind of break that apart, Clay. We know we've got the fund short on the corn side, and this is going to be a rather unique year in which they've held that short all the way through some of our areas through the summer when we've had usually a time when they bought back and reversed their position. We've got them long on the bean side. We'll have to see how long they want to hang on to that side. And then we've overall got crop conditions that's a little bit for everybody. If you're sitting in Iowa and eastern Nebraska, you're going, these conditions are a little dry and I'm not sure what we're going to get for yields. But then across the rest of the country, as we saw in the crop conditions this last week, we saw a nice improvement. And as a result of that, we're setting ourselves up for what appears like some really good crops on the corn and bean side. And as a result, I'd say the supply and the supply discussions kind of in the driver's seat right now, even though we've had some good export numbers and some good demand numbers, Clay.
Whether you want to talk about the supply side of the equation or the demand side of the equation, it's all in the monetary funds of how that trades in between, and then primarily that's priced in U.S. dollars. Now, we've seen the U.S. dollar index today take several percentage points off the top, now around that $92 to $93 handle, which is positive. We haven't seen this type of price action in nearly 5 years on the U.S. dollar. But, Jeff, you and I have talked about this before, the fact that when you're looking at the dollar, you're typically looking at the index, and that's it against a basket of other currencies. So right now what we're seeing in the dollar action, is this useful to commodities, or is this something where it's more euro and global currency based?
I think it's more global currency based. I mean, anytime we can have a weakening, the thing we always look over to and see how we're doing against the real. And the nice part is we've actually had some improvement. So we are a little more competitive on the currency side against the real. And we know that basically the Chinese, whether you want to call it the yuan or the renminbi, that's basically pegged to us, so not a lot of difference there. So then we look out and see what's happening out there against the Argentine peso. But I still think it comes back to the supply and where do we think we end up going from here, Chad?
Now, as we look as well back to that supply side of the equation, you said it earlier, we've got really strong crops heading into the first week of August here in the U.S. with the soybeans as well as the corn. And maybe we're not talking enough about soybeans and just how good of and strong of a crop this could be. From your perspective, what are you thinking on trend line yields and possible carryouts as we start to look towards the end of the marketing year?
Yeah, starting first on the corn side, I think something we have to look at is that our current number, USDA is using a 178.5. They've been at that number. We're really thinking because of conditions and also looking forward to what the forecast is, we're thinking that something around the 182 is in the cards, and it could go a little higher than that. And when we throw in that 182 number, then we start talking about the ending stock number. And unfortunately, we start getting back up to that 3 billion bushel area again on the corn side. And when you throw a stocks to use on that, that starts getting to be down in some concerning levels, Clay. We start getting ourselves back down, 295 type these futures numbers sometime between now and the time we get to harvest. One other thing that we run into, though, is as we look at the demand side, one question we have in the back of our mind, we think the exports are going to be good, but we have a little bit of a question mark on that ethanol side. And our question mark on the ethanol side really comes back to what is going to be the new normal in regard to miles driven, because sitting where we're at right now, we know that we need to see more miles driven if we're going to be able to continue to increase our ethanol production to get it up to a level where we even have a chance of hitting the forecast for the 2020. Because on the 2020, we're setting it at 5.2 billion is what they're looking at for the demand side on the ethanol side. And at our current pace where we're at right now, we wouldn't be able to hit that. So that would then cause the ending stock number to go up a little bit more above that.
Again, Jeff Peterson with Heartland Farm Partners here joining us today on Trading Bits and Bytes. If you'd like to follow Jeff on Twitter to see his latest thoughts in the markets and marketing, make sure to follow at Jeff Peterson01 on Twitter. Again, it's been Trading Bits and Bytes on the Rural Radio Network. Have a great day, and we look forward to talking to you next week.